What's up, everybody? My name is Zach Trapper Phi, and today I want to address a recent video where I talked about how I didn't think the market was going to crash 10, 20, or 30% in the near future. You know, maybe the market isn't crashing right now, and I still feel that way. The market's down 3% in the past week, but to me, it all kind of makes sense. And I'll tell you why. Oh yeah, and of course, before we start, please make sure to hit that like button for my new background. We just moved actually, so I'm holding the Blue Yeti. It feels really weird. It feels like I'm holding either a piece of bread or a very small football. I don't know. It's kind of, or maybe an egg, maybe like an ostrich egg, something weird. Whatever. Right now, let's just get into it. My reasons for why I still don't think you need to be afraid about a crash, why it's happening right now, why the market's going down, and what this means for you as the investor and how you can benefit from it. The number one reason in my mind for why this dip is occurring right now, and also the number one reason on CNBC's mind, is that the Delta variant of COVID is really spooking people, which makes complete sense. It's another form of COVID. Nobody wants it. Luckily, vaccines have been shown to be quite effective against it. So, number one, get vaccinated. And number two, what I think that means is that if we do have another shutdown, or economic shutdown at least, then it's probably not going to be as extreme as it was back in March of 2020. That was when we had no idea if we could do anything about COVID. We didn't have a vaccine, and everyone was significantly more afraid. Right now, if a shutdown occurs, it'll probably be a much smaller scale. That means that businesses will stay open and people will still be able to make money, get money, work, do all the normal things, whether they have to wear a mask or not, or if vaccines start to be mandated or something along those lines, there could really be another dip in cases. Right now, we are at an unfortunately large amount of cases. So, like I said before, vaccines really help and really work. So definitely check that out. My second reason is inflation. As always, why not? Basically, Jerome Powell spoke a couple days ago or last week in front of Congress and told them that he still thinks it's likely transitory. So the Fed isn't really going to touch interest rates till at least 2022, maybe even 2023. What that means is that interest rates are still going to stay at these historic lows. People are still going to be able to take out mortgages on homes for pretty low rates and do anything they were already doing with these low interest rates. That's a big deal because when interest rates start to go up, the economy starts to freak out and people usually back away from stocks and they usually decline. But right now, it's still low. It's not being raised anytime soon. We don't have to worry about this. I think Jay Powell just really inspires some fear into people. So whenever he speaks, they just get nervous. And then that on top of COVID, the Delta variant really is just not a great combination for investors right now. Okay, so all things considered, this is pretty great for you and I as investors. Why is that? Well, everything is on sale. Every stock is pretty much on sale right now, especially the growth stocks. Those are really on sale. But seriously, go out there and start averaging down. That's what this is the perfect time for. Everything is about the same price as it was last month. And imagine if you could go back to March of 2020 and average down then. You would have loved to do that. That would have been fantastic. You would have made so much money. So why should you change your mind right now? Yeah, sure, the market could continue to go down for some short period of time or some extended period of time. Either way, just make sure you're averaging down where you still have some capital left where you can invest if need be. Hopefully, and in my opinion, likely, this is all going to kind of blow over soon, as COVID initially did, as you see on the homepage of CNBC here, that the recession from COVID lasted only about 2 months, which is pretty crazy. That's the shortest one the US has ever had. So that leads me to believe that another Delta variant fueled nosedive in the market is probably going to blow over pretty quickly as well. Sure, the inflation thing could be something that lasts a little bit longer, but for right now, I think the biggest fear is this Delta variant. So as long as you feel like neither of these issues are too permanent, then I think it's a great time to hop back in there and just start averaging down. I just did this morning. It was great. Woke up, had coffee, averaged down. It's a great practice. I might do it again tomorrow, or I might not. Maybe the market will go up tomorrow. We never know. Thanks so much for watching, everybody. I really appreciate it. Thank you for watching through this terrible video quality because I am filming on my phone right now because my camera is still at my old apartment. Major fail. Next time, I promise will be filmed on the camera. For right now, I appreciate you watching, and I got some good videos coming up soon, so Make sure to subscribe, hit that notification bell as well, and of course hit that like button. I'd really appreciate it. It really helped this video, channel, and it helped me out. But I am this channel, so you just doubly help me out. I think that's okay. Also, if you want to start a brokerage account, you can start averaging down right now. Stocks are basically on sale, so start that public account, get a stock valued up to $70, and then just watch it go up and up and up as the market recovers, right? All right. Thanks again. See you in the next one. Bye.